Good morning, ladies and gentlemen. It is an honor for the United States-Mexico Chamber of Commerce to thank the opportunity to be partnering with J.A. Del Rio on such an incredible conference that we have this morning called Charting the Tax Future Maquiladoras in Mexico 2025. The California chapter of the U.S.-Mexico Chamber of Commerce has worked in very different opportunities with the maquiladora sector. This is such an incredible opportunity to learn from the experts on how to manufacture and the nearshoring in Mexico. As you all know, Mexico has been right now at the top of the countries around the world to do the manufacturing. Many of the companies have left China. They've been moving to Mexico. And we can see that, for instance, Mexico has over 6,200 maquiladoras all around the country. The main place where they have the maquiladoras is in Baja California, with around 1,200 maquiladoras in different industries, followed by Nuevo León, Chihuahua, Coahuila, Jalisco, Estado de Mexico, and Querétaro. We really thank all the organizers of this, and I'd like to welcome our President and CEO of the United States-Mexico Chamber of Commerce, Mr. Albert Zapanta, who will be giving us some welcoming words. Thank you, Mr. Zapanta. It is an honor for us to have you and to welcome you to our event.
Okay, I wanted to have everybody, can you see the screenshot of where all our offices are? Okay, great. I wanted to have that as something that everybody can see that's on the Zoom at this point, because it's important that the members of our chamber, especially our board members, have the ability to connect up to all our offices if they have a need or if that's part of their marketing plan. Okay, so that's why I wanted to have it up there. So at this point, any questions? Anybody have any comments? So I'm just now want you to know how much I appreciate you joining our board. Marlene, thank you for working hard to bring our friends in, but more importantly, as to how we can help them into the future as some of the activities we're going to be doing. We are going to be doing in November, it looks like around November 20, our annual board meeting as a continuation of the virtual one we had this May, along with at least most of a day conference focus on the two new administrations, the administration that takes office in Mexico City on October 1, and then of course the election that had just been concluded in the US 2 weeks prior to our meeting, which will take office in their transition will be January 20th of 2025. And a third note is that Canada will have its elections in the spring, that it will also be changing up its potential of their administration. So there's a lot of activities over the next year that will start to impact how we do business and how we go forward. The second part is that I wanted to show you also the map of where we are in Mexico. We will be in Aguascalientes we haven't decided if it'll be the last week of September or the first 10 days of October. We still think it'll be September, but we'll let you know that that'll be where we have a major activity where we will be visiting the INEGI and with Graciela Marquez, who, as you recall, was the first Secretary of the Economy, who we actually met with the day before the election 6 years ago. And so a very old dear friend who has invited us, and so I'm going to ask each of our chapters to join us in Aguascalientes, because that's where the headquarters is. And so that'll be part of probably a most of a full day, 3/4 day conference where we will be visiting with her and to really get a lot of information on what portends for the Mexican economy and much of the potential development that'll hopefully start to show up more and more in the coming year. So those are the 2 slides I wanted to show you. I wanted to welcome you all. And if there's anything I can answer, any questions, and then of course I'll turn it over to Marlene. She can answer it just as good as I can. Thank you for joining us. Bienvenidos, and we look forward to seeing you, if not in Aguascalientes in September, Washington, D.C. in November. Thank you. Gracias.
Thank you very much, Mr. Albert Zapanta. It's an honor to have you again. And now it is my greatest pleasure to introduce our very distinguished speakers that will be conducting this seminar and this webinar called Charting the Tax Future Maquiladoras in Mexico 2025. I will read their very interesting bios. Let me start by introducing first Blanca Montaño. She's a certified public accountant by the Mexican Institute of Public Accountants, graduated from the Universidad Autónoma of Baja California with a master's degree in finance awarded by the Universidad of Guadalajara and a specialty in taxes and legal services obtained at the Universidad Panamericana. With 2 decades of professional experience, Blanca specializes in tax advice for investors, both nationally and internationally. Thank you very much, Blanca. Welcome. Let me introduce Maria Jose Gonzalez. She has 13 years of experience, most of them in a Big 4 law firms. Maria Jose is a specialist in complying with companies in transfer pricing matters. She also has extensive experience coordinating regional projects in LATAM. She graduated as an economist from the Universidad Iberoamericana, Campus Puebla, and has a master's degree in strategic business consulting. Also, she graduated in financial strategy and business strategy from the Universidad Panamericana in Mexico City. Welcome, Maria Jose Gonzalez. And my last very distinguished speaker is Antonio Avila. He holds a degree in international business and law from the Universidad de Guadalajara, a master's degree in administration and MBA from the Instituto Tecnológico de Estudios Superiores de Occidente, and specialized studies in supply chain from Rutgers University and contracts from Yale University. With over 20 years of experience in foreign trade, Antonio has advised companies such as IBM, HP, Flextronics, Sanmina, Puma, Cuervo, Samsung, among others. He's a speaker and a trainer for foreign trade issues at the national and Latin American levels. So as you can see, we have a very, very distinguished set of panelists. So I will give you the word to all of you. Thank you very much.
Thank you, Marlene. Good morning. Thank you for joining us today in this very interesting subject for maquiladoras in Mexico. As you will see our table of contents, we're gonna go through the maquiladoras background in Mexico, what is the current status about APA, what's gonna happen for the transition from safe harbor from APA to safe harbor in 2025, what are the next steps for the analysis of the tax effects, the tax, and then what are we going to analyze? The tax topics, transfer pricing topics, and global trade topics. So let's start with the next slide, please. We're going to start with the maquiladoras background in Mexico. Okay. So we are talking about what's going to happen for maquiladoras in 2025. Before going to that, we need to go back to the basics of what is the normal or the original structure of a maquiladora, how it's working right now. So you have a foreign company, as you may see, we have American companies, we have European, Asian companies that come to Mexico and they want to manufacture their goods. So Up until 2024, Maquiladoras have been a good manufacturing structure. They still are. So they are still a good manufacturing structure. So the deal is this foreign company brings machinery and equipment and raw materials into Mexico, imported in a temporary regime, like with your IMEX program. It is sent to the Maquiladora company, which transforms that raw material with the machinery equipment, also property of the foreign company. And finally, returns finished goods abroad. No, it does an export, but it's technically a return, so that the cycle is closed. Obviously, this is the basic scheme, but remember that since the Maquiladora company cannot sell in Mexico, sometimes there's a lot of companies that have an additional company, an additional structure company, a sales company. But well, let's, as we were saying, stay in the basics. So now can we go to the next slide, please? Why are we making such a big deal about not having an APA for 2025? Why are we saying maquiladoras are important in Mexico? What are the main tax benefits of maquiladoras today? Well, the main one is the protection of the permanent establishment. As we were saying, that manufacturing process in Mexico with raw materials and machinery equipment that are property of a foreign company and gives you a permanent establishment in Mexico to the foreign company. What does that mean? A permanent establishment basically means that if we didn't have that protection, the foreign company would have to come into Mexico to the tax authorities, register, have a Mexican tax ID, pay taxes in Mexico, not only for the maquila service fee, no, what you would have to pay is related to the global sales of the manufactured goods in Mexico. So that's why it's very important to always have this protection of permanent establishment, and it's our main benefit. It is a little sad that along the way of the evolution of maquiladoras, we've been losing. The industry has lost some benefits, but this is a good thing. We still have benefits and we have to protect them, no? So another one that is very different from all other Mexican companies is the additional deduction of exempt wages. Any regular Mexican company has a limitation to deduct exempt wages, and that is they cannot deduct half of those exempt wages. Well, maquiladoras have an additional deduction that lets them deduct exempt wages up to 100%. So this is very important also because maquiladoras, one of the most the most important expenses in a maquiladora are the wages. So that's the reason why we have this benefit. And finally, and we're putting some dots in there, the VAT certification. This is not exclusive for maquiladoras. This is for IMEX companies. But technically, if you have a maquiladora, if you want to profit of the whole scheme, is you need the VAT certification. So this is basically what are the main benefits in Mexico for maquiladoras. Now, what do we need to be a maquiladora and to be compliant to be a maquiladora? So can we go to the next slide, please? Yes. So as we were saying, there has been a big evolution of benefits and also requirements to be a maquiladora. Up until now, the tax requirements to be a maquiladora in 2024 are be compliant with transfer pricing obligations when determining your taxable income. And for that, you have two options. You can do the safe harbor computation, which is the tax profit, the higher between 6.9 on costs and expenses or 6.9 on assets. That is a staple, the safe harbor computation. However, sometimes for some asset-intensive companies, the 6.9% on assets can be a little burdensome. Therefore, a lot of companies up until 2024, they had the advanced pricing agreement, the APA, which Maria Jose is going to talk about a little bit further. Our problem is because tax reform for maquiladoras, starting 2025, there's no gonna be option of having an APA. So that's the reason why we are here today to talk about what is gonna happen to maquiladoras for 2025, where there's no APA option. No? But finally, this is another list of all the requirements that a maquiladora has to comply with. It is a short list, but it's very important to have full compliance to have the protection of permanent establishment and all the requirements. No? So have the machinery and equipment has to be owned by the foreign company at least 30%. The other maquila income it must not exceed 10% of the whole maquila operation income. And if in case of any sale of assets, you have to like let the tax authorities know through a notice. And finally, the filing of the DMC. Sometimes some companies say, oh, if I don't or if I file late, the DMC is not gonna happen. It's not happening. It's not a big deal, but you could lose that protection. So that would be not good. So please let me introduce you next to Maria Jose, who is going to talk about more about the advanced pricing agreement and the current status, and I'll let you with her.
Hi, everyone. Thank you very much for joining and for being here. Well, now I'm going to discuss a little bit about the APA or APA status. And for understanding that, I think we're going to have to go a little back on history. As you know, or if you don't know, I will tell, for the APA in Mexico, specifically for Maquila, we have a methodology set mainly by the IRS and the SAT, or fiscal authorities in US and Mexico, that we call Qualified Maquiladora Approach, the QMA, or also known in their beginnings as a fast track. We have right now two versions of what it is the QMA. The first version was the original one, where it was set the basis on you have to establish your maquila is asset intensive or capital or personal cost intensive, basically obtaining a ratio. And depending if your company is located in assets or in personal, well, you have to locate yourself also to have a certain profits associated. Also, there was a division by industry. We have mainly electronic, automotive, and the others, having electronic as the lower profit and automotive as the highest profit, and the others were more or less in between. So this methodology was set in its time as fast track, and it was established as a mechanism that defined the APAs between 2014 and 17. So as long as you were applying the formula, basically the resolution was relatively easy to obtain by authorities. So we saw this first set of APAs that they had a easy resolution. And what happened next is that many companies, when they were applying this formula and applying the QMA, started to use certain concepts as particular of its own case, and they presented different numbers with tax authorities. So the authorities started to question more and more about the information it was presented. Also, there was no detail on what information should be included. We had in that moment construction in progress, for example, or if we have to use segmented information to authorities. So what happened is that we change from a fast track approach on authorities of going just reviewing a formula and an application of a formula to be more in a scheme more related to an audit, to the presented information or the information provided to the client. So this situation has been delaying all the reviews of tax authorities for APAs after 2017. We also had for this version 2, that it was the after 17, certain conclusions about receivable accounts, especially when companies have an important amount of receivables. Authorities say this is not a arm's length behavior, so it is necessary to have an additional profit related to this financing of the receivables. So it is something that it was added in that time. So what we have right now for 2019 is that slowly, but we are still, or authorities are still solving these APAs. There is still a stock of APAs for 2019. However, we highly recommend you go with your advisors to be closer to the authorities in this sense, and I'm going to explain why. To try to see that your APA be solved as soon as possible. But it is really normal that your 2019 APA is not solved yet. So in 2020, what we have, it is not that the methodology of the QMA lost its validity because of COVID, but things related to this methodology, like the profit margins, had to consider or had to be reviewed to consider all the pandemic situation in 2020. And this is something that even the industry asks to authorities at its time. So authority right now, the IRS and the SAT, has been reuniting to define the 2020 and following years QMA, they were waiting to see the effect that the pandemic will have or had in the comparable companies' profit or some on the indication. So what we know, and at that time, that is why also authorities allow in 2021 to set your last APA after the law change in 2022, so you could have your 2021 cover and until 2024, that it is the year that we are right now reviewing. So with the QMA, basically you share your Excel file. It is expected that companies present this Excel file shared by the authorities. The authorities will review it, and you will have a resolution according to it. So more than after 2020, more than expecting the new QMA, that actually authorities already say that they are really advanced in the negotiations. So we are expecting this will be delivered promptly. What it is also important to consider after this is that after you had your APA adjustments, after review of authorities, etc., one relevant thing is that authorities in the past has allowed companies to present a complementary tax return for the last year in the last year of your APA for all the years before. And this is important because even this is a resolution or delay of the authorities, a taxpayer has to pay surcharges and restatements or updated in the amounts of these adjustments. And this can actually become a really high and have some impacts on monetarily speaking about this. So for example, if you are gonna be sold for 17 to 19 or whatever, right now what you will have is that you will have to pay surcharges from 19 to 2024. So it is important to have in mind for everyone the cost implicit in the APA that we are discussing. So For 2020 and 2024 and what is coming next, some client has asked me if it is recommended to correct now and not wait until the resolution of the authorities. And the answer is that it actually depends on each client. There is no certainty on the best way to proceed because we assume authorities will take the same position about the surcharges and be able to not open each fiscal year, but just the last of the APA. But I think that is something to be analyzed in the future. So what are the options for Maquilas after 2022? And I will let Blanca to discuss this, but I think the main question and some questions that clients do to us is it still worth it to be in the Maquiladora scheme? I mean, it is, there is manufacturing models. I mean, I think the discussion is going, or at least the companies are having in the back of their mind, like, is it really worth, or I have an advantage of this? So we are going to start discussing that.
Excellent. Thank you, Maria Jose. Yes, what is the objective of today talking about what's going to happen if there's no APA? The objective is not saying, oh, don't be a maquiladora anymore. It is not like transform into something else. No, that's not our objective. Our objective today is say what is the status quo right now, say what are your options for 2025 coming, like your manufacturing options in Mexico. Mexico is still and I think it will be for a while a great place to bring your business and to manufacture in this case. And the only thing is you have to probably pause a little in your company, in your operation, and well, not like that, not pause, but just take a little moment to identify what's gonna happen to your maquiladora for 2025 if you don't have that APA. Why? So that you can identify if there's any potential risk, if identify if there is an additional burden, an additional cost, mainly those companies that were in APA that are asset intensive. The safe harbor could be burdensome for income tax and profit sharing purposes. So that's the reason why we are talking today about this. For example, the first option you'll have for 2025, say that there's nothing published in the next months about any APA. Well, the first one is to have your safe harbor maquiladora. That's gonna be the way of computing your maquila income, and there's not gonna be any options. Your operation model by the safe harbor maquiladora is, as we already talked about it, the inventory and the machinery equipment are property of the foreign company, and all the risks are also bared by the foreign company. The other options, well, we have them here: toll manufacturing, contract manufacturing, and full-fledged manufacturing. Depends if you decide at the end that you could manufacture in those three ways. You have to see how you're going to transform to those companies, how you're going to like transfer the inventory, machinery, equipment, and the risk. So in this case, what can you tell us about a little bit more, Maria Jose, about these issues of the risk, the transference, and
Yeah.
profit?
Thank you, Blanca. Yeah, and I think it is important to mention, or what you already said, that we are not seeing a tendency from companies running out of the Maquila scheme to other options. It's just that it is important to consider your options because we have found that for many companies, not most, but for many, changing it is actually something that probably is the best option for them. So What we're going to see in this toll and between this toll and full-fledged manufacturing that Blanca mentioned is that we are going to go from having all basically proprietary of the foreign entity to the full-fledged where the Mexican entity bears all the assets, machinery, equipment, know-how, property, everything is in the Mexican entity for the full-fledged. So right now, we have the toll manufacturing that it is a really similar model on what we have in Maquiladora. And even in practice, if you read some text in the US, you will find that the translation that they make for Maquiladora is toll manufacturing. But the main difference here is that in this case, machinery and equipment belongs to the Mexican entity. And that's the main change that we will make from a Maquiladora to this. So the main pros of this scheme is that companies practically will remain with same operating profits that they have with their APA or the YAPA. And generally, there is much less disruption in the activities or in the manufacturing operations. I mean, operations are going to be basically as usual. Obviously, it implies, and in this scheme and every scheme that we're going to discuss, implies all changes related to the transfer of the machinery corresponding to appraisals, how this machinery is going to be financed, if this is going to be by debt or capital, the VAT, because now the assets will be in Mexico at the moment of the sale. So everything has to be discussed in risk related, but basically it is the main change here. And the main cons or this disadvantage is that just because you already have the machinery and equipment, you cannot assume that this will save you or protect you from creating a permanent establishment in Mexico. I mean, for that, we need a more further review. Because right now, Maquiladoras, Blanca said, the main benefit is that you have explicit explanation on the law that allows you to not create permanent establishment. So going in other sense of Maquiladora, you don't have this explicit explanation. So it is something that we have to evaluate, since we are going to evaluate functions, asset, risk that will be carried out through the toll manufacturing, and to see if it is possible to avoid a PE. Another point to consider, and Blanca will discuss this later, is related to if we have to consider this as business restructuring for Chapter 9 of the OECD guidelines, or if it is a exportable scheme, and everything related to changes to this. Another point or another case is the contract manufacturing. In practice, this is a more complex model than the toll manufacturing. But to simplify, basically, the Mexican entity will be proprietary of the machinery and equipment and the raw material inventories. So with this, the risk of PE or permanent establishment can be less. Also gives companies the flexibility to have sales in Mexico, something that right now you don't have with your maquila, because everything has to be exported. So the consequence is that since the Mexican entity will have higher functions, assets, and risk, the expected operating profit should be higher than with a toll manufacturing or your current maquila scheme, or at least that is expected. Also, this makes logical because since you are the owner of the raw material and the fixed assets, the cost base increases. So therefore, the invoicing will increase and your income will increase, and everything is going to be higher in this sense. Also important considering things as defaults into restructuring, reportable scheme, etc. So one question that usually they made me is it possible to move from a maquiladora to a toll contract tomorrow? I mean, you can do my analysis, and can I move tomorrow to this? And the answer is no. We need really to think through the process of this. I think the main thing to think is actually how you're gonna be, how your machinery will be property of the Mexican entity. There are really old machinery, so we have to appraise, we have to see the best moment. And also we don't know, we don't have a crystal ball. We all have our cross fingers of the APA probably coming back in 2025 for 2024. So I don't know if it is the best option. And also this change of scheme has to correspond to the benefits that you don't see any more benefits from the safe harbor. I mean, when you do your analysis for the safe harbor and you realize that you are actually paying taxes that does not correspond to your company, and this is happening a lot for the asset intensive entities. So well, this is the transformation that we, or the transitions that are possible for our companies. Next slide.
Yes. Well, up until now, what are the next steps? What are we needing to analyze for these transformations, or in any case, staying as a maquiladora? So let's go through the next steps. The first one is to be alert of any publication of decree, rules, amendments to the laws, no, for the validity of the APA. As Maria Jose was telling us, up until now, there's nothing that give us an idea that there's gonna be an APA. But what happens if in during 2025 there's an amendment to the law and there's an APA? Your maquiladora still would be able to go and opt for that APA. So that's why it's that we cannot suggest, or we don't recommend to do harsh reactions in these regards. No, we need to be, but we do have to identify if there is uncertainty of the law right now. So what are we suggesting right now? Well, for your company to do a comparative analysis of your current situation with APA versus the safe harbor. If you haven't computed your safe harbor, you cannot tell. Probably even your maquiladora is falls under the 6.5% of our expenses, and you don't have a problem. Probably if it's even good for you to have a safe harbor, no? But you don't know if you haven't computed that safe harbor. So the first thing is we need for your company to do that safe harbor analysis. If you can do two things, you can do an estimation of how it's gonna look for 2025, or another idea is what you have in 2024 up until now, and do a comparison of the safe harbor computation with the APA, or as a more, if we want to be more certain, with financial figures and tax figures of 2023. But the important thing is that you see what difference is, how much income tax and profit sharing you would be paying with APA, and how much that you currently have, and how much of those taxes and profit sharing you would pay if you would have a safe harbor. So that's the first thing. The second thing is, or the third thing in this case, is identify opportunities to enhance the tax efficiency of the safe harbor computation. What I'm saying here is basically the safe harbor computation comes from your financial figures of the maquiladora and from the inventory and machinery equipment of the foreign company. So, for example, one of the triggers for companies that have 6.9% of our assets, the triggers for paying high taxes is having an account receivable with your intercompany. That is, the maquiladora has an account receivable with the intercompany, and it is there. It has like more than 2 months of aging. It has 6 months. That account receivable can be gone It shouldn't be there because any peso or any dollar that you have in that account receivable will impact your safe harbor computation, and you'll be paying taxes over that account receivable. That's an example for Maquiladora part. But what happens on the other side of the company abroad? For example, inventory. Your company abroad sends a lot of inventory to Mexico, but they're not being used, or probably it is not being efficiently sent back to abroad, to wherever you're sending the finished goods. Well, the average of that inventory, it will be used for the computation of your safe harbor. So that's another thing that you can make it more efficient. So that's to have your safe harbor the linearest possible. Fourth, it's evaluate alternatives for 2025 and beyond. That this is where Maria Jose was telling us, oh, well, okay, what options do we have? Toll manufacturing, we have contract manufacturing, and full-fledged manufacturing. So in this case, full-fledged manufacturing. And so you have those three options. You have to think how what the profits are gonna be in each of them. Like the profit margin in each of them. How it's gonna affect your transferring of the inventory and machinery equipment. The VAT, actually, that was already like talk about. And finally, assess the tax implication of any manufacturing model transition. And for that matter, we're gonna see the next slide. Thank you very much. So in here, we're gonna start seeing the main tax topics. The first one of them is the if you consider on restructuring is the reportable schemes. So the reportable schemes is an obligation that started in 2020 for all companies in Mexico. So in this case, why are we talking about reportable schemes? Is because you are in a business model right now with a related party, and you would want to go from A to B in that business model. So that implies a possible restructuring of your company, a possible transfer of assets, like all that kind of changing in your structure between related parties. So there are certain rules that if you do that, you may go into reportable scheme. You have to report these to tax authorities. That doesn't mean that what you're doing is it is wrong. It only is letting the tax authorities that you're doing it. And so that's why we have to have, if your company decides in the future to restructure, first you have to have everything well documented. You cannot, as we were saying, we cannot do harsh decisions. And also we have to study, because probably if we go with the federal tax code, where is the reportable schemes origin from, we can go see, and you know what, this is because how you did it, you did value the goods, or you value the machinery equipment, and there's a payment because of the transference. So probably you don't need to report them, but that's why it's important to consider all these topics. The next one is business purpose. Business purpose is something that is also technically a little bit new to Mexico, but it's not new on the tax models of the world. So in this case, they're saying if you're going to restructure, the restructuring has to be done because it is needed for your company. It is the tax you're not doing it because of the tax benefit. You're doing it because you have another purpose that is bigger than the tax benefit. So this is also in the federal tax code. Also, you need to have we can say defense file, but that sounds very how do you say, like in an offensive way, not offensive like you have to offense an offense like technique, but you need to have this documented, because if not, in the future, you did all your analysis, you restructure your company, but we didn't care of documenting which was the business purpose of doing the restructure. Well, that is something that the tax authorities can recharacterize the operation, and that wouldn't be good for the restructuring, because they could say, no, that was not valid, or you should pay taxes as you were doing it before, etc. So this means that if we're saying we're gonna change into contract manufacturing, we're not gonna say, oh, we're doing it to pay less taxes in Mexico because 6.9% of our assets is too expensive. That's not something that we would say. Why are we doing it? Because this is letting having a 6.9% of our asset profit sometimes can get you into a case of your real profit margin being of like 20-50% of your EBITDA. So that gets you out of market, like in reality, like that it is not sustainable operatively and financially. So that would be one of the reasons. So in that case, business purpose, that's why it's very important to document. The next one is the permanent establishment protection. And in this case, we already said if you're staying safe in Maquiladora, you'll have the permanent establishment protection as long as you comply with the tax requirements. But if you transform, as Maria Jose was telling us, the toll manufacturing is not that clear, because you have to go case by case, reviewing each scenario to see that you don't have a permanent establishment in Mexico, because for the other three operating models, you won't have this protection that Maquiladoras have. So that's another thing that you have got to be careful. And the last one is what we were saying, the safe harbor and key areas of opportunity for achieving fiscal efficiency. So in this case, what we already talked about is that if you decide to stay as a maquiladora, which I understand we are right now talking about, don't run to be another type of company, just like stay. This is a regular observation, a regular recommendation to all our maquiladoras is review your tax computations, review what can you do better to your computation of the maquila income if you're a safe harbor maquiladora, in order that you pay what is right. Like we're not saying don't pay either, like pay what is right. If the account receivable is too high, if it's more than 2 months, it shouldn't be there. We can compensate it against the profit of the company, etc., not against dividends. There's ways that we can do that better. So this is for the main tax topics. In the next slide, we will talk about the transfer pricing topics to be checked.
Perfect. And basically, I'm gonna go fast so Toño has the time to talk. But what we wanted to show is that what implies transfer. Next slide, please. Transfer pricing obligations. For you, if you are not going to present your safe harbor because you're not going to be in the Maquila scheme, what we have with an APA, as the name is established, the APA is an agreement and anticipated price agreement. So authorities of transfer pricing, previous to have your transaction, accord with the authorities what will be your transfer pricing. So authorities will give you a resolution, and with that resolution, you don't need to have any further documentation for transfer pricing purposes. This creates certainty in the multinational groups So it is really something that can work when you are creating or establishing an operation. Also, having a resolution from tax authorities imply that no further transfer pricing obligation had to be met, as I mentioned, especially in Maquila and non-Maquila entities. This applies for both. So applying the QMA is enough for compliance. And also in APAs, you usually try to negotiate a low profit margin given the functions, assets, and risk for the Maquila entity. But since we haven't had any resolution for 2020 and on, we have to expect surcharges, updates, and money spent in that sense. On the other hand, we have the transfer pricing compliance in Mexico, which is not minimal. I mean, any entity in Mexico that has income above 13 million pesos, and in this case does have intercompany transactions, or it is not in the Maquiladora regime, has to prove that the intercompany transactions are according with the arm's length. That is that they are performed like third parties will do in similar circumstances. So in this sense, you have to prove to authorities this, applying the transfer pricing methodology, but basically having your transfer pricing report, presenting your informative return, your Appendix 9, that contains a lot of information of the report. And if you are a taxpayer that has income above 1 billion pesos, basically you have to present also your local file and your master file. Local file is similar to report, master file similar to or explains the multinational group functions. So the advantage, there is no cost for submitting this information to authorities, no reportable scheme, obviously for routine transactions. And finally, well, authorities will only review under an audit process, so it is expected to have less inspection from authorities. So I will leave Antonio to go to the foreign trade tax.
Okay, thank you, Majo, for speech. Okay, I'm going to share some global trade topics related with the Maquila scheme and IMEX scheme. Please, can we change to the next slide, please? Okay, as you know, all the scheme that we commented in the previous slide, all are related with the IMEX operations. So one of the two benefits that we have as an IMEX company is also VAT certification. That is the first one, and the other that is the principal is to maintain the IMEX program. So I'm going to talk about two specific topics related with these two authorizations. One is related with the obligation of exporting at least $500,000 US or 10% of the total invoices to a foreign entity. This percentage, some of the companies follow up and try to be in compliance all the time, but they forget that we have another percentage that we must be in compliance, that it's related with the VAT certification, that it's pretty close in the definition because the authority, the SAT authority, tax authority require the 16% of the return in the last 12 months. What it means that we must have as a company with VAT certification that we must return the 60% of the temporary imports in less than 12 months. Many companies are not having compliance in this specific requirement, and they have been canceled in their certification. So one of the principal topics that we must follow in order not having problems with these two authorizations. So can we change to the next slide, please? Okay. We have another topics related with the safe harbor. As you know, if we are changing from APA scheme and we are moving to safe harbor, and also if we are trying to change our operation in the other schemes that Blanca commented, it's necessary to consider if we are going to have a modification on the agreements that we have with the foreign entity. If we have modification, we must notify to the authorities, to the Secretary of Economy, and also with the tax authorities, this modification, because the IMEX program has a rule that every modification with the operation that we have and also with the VAT certification, we must notify to the authorities. Also, another topic that we need to follow is the obligation as a safe harbor company. If we are working as a safe harbor company, we must declare in the export pedimentos the added value. This is a number that we must to charge to the custom broker, and some of the companies don't have updated this added value. So it's pretty important to be sure of the real number of the added value. So because exists an audit process of the tax authority that they like to review this specific data in the export pediment. So, okay. Can we change to the next slide, please? Okay, another topic that is pretty important for us is that we have a currently audit for all the VAT certification companies. So the last year we had a lot of cancellations and also companies that have requirements because they are not in compliance with the VAT certification. So one of the process that the tax authority likes to do is the visit of the companies, and they validate 19 specific compliance points that many companies are not having controls of these 19 compliance topics. So if the authority detects some errors on some not compliance in these 19 topics, so the first step is to suspend the VAT certification, and probably they cancel the VAT certification. So the authority is trying to limit the benefits, not for many companies, and that's why it's very important to have compliance in the VAT certification, because if we lose the VAT certifications, we are going to have 2 years of not having these benefits, of not paying the 16% of VAT on temporary import. So one of the principal topics that we need to consider. So if you know, we have some benefits with the IMEX and VAT certification, and we must consider that the compliance is a good way to maintain these benefits. So that's all for my side. So we can continue with the questions, probably.
Muy buenas tardes, muy buenos días otra vez nuevamente. Muchas gracias. Thank you all very much for your participation in such an incredible discussion. Now we have some time for a few questions from the audience. It seems like there is a lot of questions from the audience. So we would like to know, for example, we have one that says, can I still be an IMEX company if I decide to leave the Maquiladora tax structure? I don't know if somebody from the three of you can answer this question.
Yes, thank you, Marlene. The answer is yes. You can still be have an EMEX program in the other forms of structures, and also you can have the VAT certification. So it is very important to know that, no?
Okay, so I understand that we have another questions. The question is, can I maintain the Maquila scheme without VAT certification? Yes, for the Maquila scheme does not require VAT certifications. As you know, VAT certification is another benefit that is not linked with the Maquila scheme. So they can be working as a Maquila scheme. Some companies, as you know, have lose the VAT certification, and they can obtain a new certification when they lose after 2 years. So there's no limitation for this specific topic.
Okay, well, we have another question while we wait. Another one will be, which is one of the benefits of safe harbor versus APA?
I can say that one of the main tax benefits or safe harbor, it's gonna be for companies that are not asset intensive, that are cost intensive. That's the main benefits. You don't have to do any further. And the other part is the certainty. That means that today we elect to do the safe harbor. We do it at our tax return. We file our tax return, and that's it. We close the tax year, fiscal year. Compared to the APA, what Maria Jose was telling us, I don't know, Maria Jose, if you want to tell about that process, remind them about the process of the APA.
Yeah, I think the advantage of the safe harbor versus APA, I mean, the safe harbor is obviously the simplification, is application of formula. The APA, well, the APA right now, you don't have an option. So safe harbor, it is the way you have to look at it. Right now, we are just waiting for those who have an APA to have their resolutions, so they have certainty on that the conclusions are okay. But I believe safe harbor actually is the easiest way to proceed in anything. I mean, not necessarily the one that gives you more benefits. You're not gonna get the more tax benefits there, but simplicity and easiness, and I think that actually accomplished the safe harbor.
Thank you very much, Maria Jose and Blanca, for your answer. So it seems like we don't have any more questions from the audience. Is there any final comment that our very distinguished speakers would like to present to the audience? Anything else you like before we close our program?
Well, is thanking you for joining us. Also, if you have any questions, you already have our information. We are a multidisciplinary team. This is something that needs to be done as a team, because for the foreign trade, the transfer pricing team and the tax team all participate first in a maquiladora structure, but also if you're thinking of restructuring, more so you need that backup. So, well, thank you very much for joining us.
Thank you very much. As you can see, J.A. del Rio, J. del Rio, it's a one company where you can be aware that they're going to help you go through the process of manufacturing in Mexico from A to Z. All your questions will be answered. We are very honored to have such a distinguished firm as one of our binational board members of the chamber. As you can see here on the screen, we have the 3 contacts of the speakers with their email addresses. You can follow them, of course, on all the social media. And if you have any questions, also please feel free to contact our chamber. We'll be able to connect with them directly. And it's been an honor and a privilege to be moderating this panel. And we very much look forward to inviting you to future programs. And we thank you all very much for your time.